So look, if you're new to investing, or maybe you just want to become a little bit savvier of an investor, you need to know the difference between different types of investment and the what these investments can do for your portfolio. The more you know about investing, the better informed your investment decisions are going to be. So you're going to want to start with some of the basics, right? We want to understand the basics and clearing up whatever confusion you have, right? So, a common point of confusion that we're going to talk about today is sorting out the difference between dividend versus growth investment and determining which one we're going to choose. So, rather than buying individual stocks, you may want to consider mutual funds, right? Now, these can be focused on either a growth or a dividend strategy, but still you're going to need to understand the fundamental aspects of each type of investment to really know what you're doing with your money. So with dividend investments, the excess return is declared and shared with investors, while the profit excess is withdrawn as dividends. In growth model investing, the excess return is reinvested in the corporation, and the only way profits are materialized is when stock is redeemed or sold. Now, each type of investment has advantages and disadvantages, and it kind of depends on the investor's individual goals, your financial circumstances, and your horizon, your investment horizon. So, what we're going to do is we're going to talk about dividend investing and growth investing, some of the pros, the cons, and things we need to know, right? So, let's start off with dividend investing. What do we need to know? What are we going to talk about? Well, dividend investing, it's going to involve buying stocks that pay dividends, right? The company pays its shareholders, you, a distribution of a portion of the profits. Now, this offers investors a chance to benefit from a stream of income in addition to the growth in the market value of the stock. Now, some of the advantages of dividend stocks are that they tend to outperform growth stocks. They offer consistent cash flow at regular intervals, and because stocks that offer dividends typically indicate that a company is financially healthy enough to pay shareholders, that investment can be a lot less risky. Right? It's just is. They have all this extra money and they're like, hey, we want to give you some. How about that? Having an obligation to pay out dividends typically forces management to make more disciplined decisions about what they're going to do with their money, right? Capital allocation, how they're going to move money around. They got to be a lot better with it. Got to be smart. Now, another potential benefit is that recent changes in the tax law allow for some individuals to receive dividend payouts, federal income tax free on qualified dividends. If your income does not exceed the set limit, a dollar you get from a dividend could end up being more valuable than a dollar you earn from tax wages. That said, investors should seek safety by looking carefully at the payout ratio and looking for companies with stable enough cash flow and income to cover the dividend payouts comfortably. All right, a good strategy may involve focusing on high dividend yield, which results in large cash flow income now, or a high dividend growth rate, which results in lower than average dividends now with the expectation of quick company growth during a rapid expansion period and per share dividend growth over the next, oh, about 10 years or so, right? And generally speaking, dividend investing is recommended for investors with a shorter time horizon looking for more liquidity. Well, that's dividend investing. What about growth investing? How is it different? What's going on there? Okay. Well, unlike dividend investing with growth stocks, money remains invested in the company and you're not going to get that payout every, some companies are a month, some are 3 months, 4 months, 6 months, once a year, right? Just whatever periodic intervals that they pay out in. Instead, all excess return generated gets reinvested back into the stock itself. In other words, with growth investing, profits are only materialized when you sell it, right? When it goes up in value and then you sell it. Now, when you are investing in growth stocks, you're banking on, you're banking on future projections and the possibility of company growth and resulting asset value growth. right? And without focusing on paying dividends to investors, the expectation is that management is focused on finding growth opportunities within the company in which to invest its retained earnings. Whereas dividend paying companies are controlling expenditures. Growth companies are just spending on growth. Grow, 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 grow. What can we do to grow? Bigger, 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 more, more, more. Now, a growth investment model is a strategy based on getting a return over a longer period of time. So it's generally best for someone with a longer time horizon who doesn't need as much liquidity. Because again, you're only going to make money when you sell. And then when you sell, right, capital gains tax, yada yada yada, right? So you're banking on the company growing, year over year, and in 15, 20 years, 10, 15, 20 years, you're hoping this company has doubled, tripled, quadrupled in value. You put in $100 and now it's worth $500, and it's just like, all right. Right. Of course, make those numbers bigger. Let's say you put in 10,000 and now it's worth 50,000. Right? That's what we're looking for. Right? So it's just which one is going to be better for you, growth or dividend, right? So the bottom line here, the conclusion, what are we taking away from this? Now that you know the difference between a growth and a dividend stock, in your head you're like, but which is better? What should I do? What's going on? It depends. It depends on factors including the return you're looking to get. What are your financial goals, like your individual goals? Right? What financial circumstances do you have? How much risk tolerance do you have? And what is your investment horizon? Are you 1 year, 5 years, 50 years? There's not a single option that's perfect for every investor, right? What's best for me is not best for you, and what's best for you, it's not best for your Uncle Dave, right? It's just there's no one size fits all. It's best to examine each investment's attributes and avoid those that don't suit your specific requirements for income from cash payout or holding for long term growth. If you're looking to create wealth and have a longer time horizon, staying invested in growth will enable you to enjoy longer returns. But if you're looking for a more immediate return, some steady cash flow, dividend investing could possibly be the right choice for you, right? It's all different. It comes down to what you want, right? It's just you have to sit there and you have to think about what it is you want, you need, your risk tolerance, your time horizon. And when you got that figured out, the answer is going to be staring at you in the face, right? Just like right here, the answer staring you in the face. Subscribe. Boom. You just click the button, you're good to go, right? Like the video. Boom. You click the button, we're good to go. Share it. And then after you share it, come back for another video. So until I see you in that next video, y'all be safe.